Notes are probably making 2 times more than a rental property cash flow.
What is not only note investing, but what is a note?
Basically, I'm buying the right to receive the note payments instead of the original owner or original lender, and we earn passive income from these real estate transactions without tenants, repairs, or landlord headaches.
So let's say I have a $100,000 seller finance note and I just need 30 grand. I meet you at the RIA. What's that conversation look like?
You don't have to buy the full note. You can just say, hey, I'll buy 5 years worth of payments from you. After 5 years, you can have the note back.
Welcome back to the Hybrid Real Estate Professional Podcast, the show where we help you build a life of abundance through real estate and small business investing without compromising what matters most. Today's guest is Sierra Davis, founder of Essential Investment Group and creator of Wealth with Notes. After paying off her student loans early with profits from her first mortgage note deal, Sierra dedicated herself to helping others build long-term wealth with real estate notes. We'll get into what note investing is, how beginners can start, and how to think about returns, risk, and scaling. Sierra, welcome to the show.
Hey, great to be here. Thank you, Aaron.
Yeah, so before we dive into the strategy, would love to just kind of know who we're talking to and what you're all about and just kind of your quick overview.
Awesome. Yeah, so like Aaron said, I'm Sierra Davis. My background is in data science, and so I primarily focus on acquiring data, looking at data, analyzing data, doing research, predictive modeling, all of that stuff. Really, really nerdy and wrote the numbers. Realized that I wanted to go the corporate ladder, as most people want to do in their careers, and realized that I needed to get MBA and all those things to get there. So because of that, making 6 figures in a W-2 career, you still get student loan debt. And so there I was kind of thinking through that. And so really transitioning how I thought differently about my career and about investing was really like after I graduated with my MBA. It's like I had to figure out how to do something. And so my corporate job kind of allowed me to think differently and think with data in mind. So kind of taking that route into figuring out what I actually wanted to do as I, got older and wiser. So that's a little bit about me. I'm born and raised in Kansas City, Missouri. I have an amazing husband and a 3-year-old son, and they keep me busy and part of why I do what I do.
That's amazing. Whether you know it or not, you are the exact archetype that this show was built to talk about and interview, which is the hybrid real estate professional, someone who leverages skills, income, connections, some sort of strength from their career or another area of their life and leverages it into some type of real estate or small business investing. So you fit that perfectly because you took, like you said, you took all the data science and predictive analytics and all these different skills that you probably wouldn't have built had you not gone down that path and got educated and got experience. And now you've turned it into a business around a strategy that I'm sure you spent a lot of time kind of dating before you married. And so now even though you're out of your corporate gig, you've got, I'm sure, a full-fledged business, which I would love to hear about.
Yeah, absolutely. So in Essential Investment Group, we acquire performing notes. So we acquire performing notes, and I can get a little bit into what actually a note is. And we earn passive income from these real estate transactions without, tenants, repairs, or landlord headaches. And so that's the beauty of investing in mortgage notes. And on the flip side, what we do is, allow buyers to get access to home ownership that they couldn't get through traditional financing. We create performing assets that either generate monthly income or can be sold to investors for immediate liquidity. But we're basically wanting to create these win-win opportunities for buyers, for sellers, as well as our investors that we do work with.
Awesome. Yeah, let's take it up one notch, like all the way to, I guess, 101. What is not only note investing, but what is a note?
Yeah, so essentially a note is short for promissory note. And so when you, lending to, family members or friends, you might have a promissory note. I promise to pay X, Y, and Z after 5 months or whatever. So that's kind of a promissory note. A promissory note that is attached to a mortgage note or a deed of trust, basically securing the investment on a property. So typically how it works when somebody buys a house, they don't have all of the cash available. So what the bank will allow them to do is, get some financing for that. And so that particular financing transaction creates this promissory note and this mortgage or deed of trust, depending on what state you're in. And so you're basically agreeing to pay the bank, $500, $1,000 a month for 30 years at some type of interest rate. And so that is the idea of creating a note. So a lot of people don't know that this is a thing. And so I tell people all the time, it's like most people have been on the other side of this transaction where they've gotten the house, didn't pay cash for it, they got a loan, but the bank set up these payment terms monthly. It's basically a contract that you signed, and that basically you agree to, as a homeowner, make these monthly payments. And if not, then the bank can do some things that can cause them to get paid, foreclosure and things like that. So really the idea is creating this promissory note, and then allowing that to be an asset. And where, I can come in as a investor. So basically an investor would be people who go out and buy these promissory notes that are attached to these properties. And I say property because, notes could be on, single family, multifamily, mobile homes, even land. So there's some notes that are created in all of these different asset types. And so as an investor, I can invest in these notes, and basically I'm buying the right to receive the note payments instead of the original owner or original lender. And so then I can basically buy the note from the unpaid principal balance and then start collecting those checks from the borrower myself.
Yeah, it's really brilliant. I think you're right. Most people don't realize maybe they go out and get their mortgage.
Yep.
And, they go to the title company and they sign the packet. They're signing a note. They're signing usually a deed of trust or whatever the state specific equivalent is. But maybe they're not realizing that usually you just think of the bank, quote unquote, on the other side of it. But there can be private investors, and banks sell notes all the time. What's interesting, though, to me is that there's kind of this like face value of a note, right? When a mortgage company, if I buy a $400,000 house and I'm going to put 25% down payment, then I'm going to borrow $300,000, right? That's a 25% down payment. And then they're going to calculate based on that loan and the interest rate we agree to, what the monthly payments are and what the amortization table is over the next usually 30 years. But my question for you is, that's kind of the market or face value of that note. When you go find notes to buy, are you buying them at that market value, or are you looking to buy things at whatever the equivalent of a discount would be?
Yeah. So because in the note world, yes, we're buying at a discount, and that's the beauty of this. And so what I kind of like to give an analogy is like, say I know Costco has the gift cards that you can buy in bulk, but imagine you buy like $100 gift card, but you buy it for $80. So you basically pay less for that. And so the reasons why, you could get a discount is because many of the sellers that I work with are those who carry notes, and basically they do seller financing. So people, want seller financing to obtain properties. And so a lot of the times there's a seller that will carry that note back, and they don't have to be the bank. They might have gotten some of their down payment, they've gotten upfront costs, and they pretty much got their money. And so they're okay with getting a little bit of a discount for that paper. And so some of their motivations, could be anything, but either, going to do another deal, or retirement, paying taxes, medical expenses, just anything that could happen. And, as our job as an investor is making sure that we help them out. And so, like I said, the win-win situation. So whatever their reason is, we're trying to get them options to get them cash and get them what they need. And so we're buying at a discount. I will say the performing notes that we do buy is not as steep as a discount as non-performing, but we're targeting anything from like 12% yield, 15%. And so example, simple, like I bought a note for $30,000 where the unpaid balance was $36,500. And so basically paying that discount, which is great for us, is basically the discount boosts your returns instantly. And so now I get paid every single month based off of the contract that they agreed to originally. So that doesn't change. And so I'm getting those principal interest payments just basically from one lender to the next. And that's kind of how that works in the discount world.
Yeah, that's fascinating. So seller finance is something you hear about quite often in the real estate investing world. And a lot of people accept seller finance offers for different reasons. Maybe they're retiring and they don't mind carrying the note, or they want to spread out their capital gains or whatever it is. And what you're saying is you can go to someone who has they have seller financed their property and issued a note to somebody else, and you buy that. And even if it's at a small discount, where the win-win comes in is that they're getting their money today and you're getting a note at a small discount, which gives you a higher yield. So it is really a win-win if that person, in fact, does want to liquidate that note.
Yes, it's just that time value of money, right? So cash today is worth more than payment spread over a decade. And so we're creating a win-win situation. We're getting them upfront where they don't have to wait 30 years to get all their payments. We get maybe 10 to 20% discount. And then they go and do these other deals. And so, that's the beauty of it. I think this industry and all of these things within note investing is a lot of extra strategies, a lot of things you can do, but it's really like, how can I help borrowers, lenders, buyer, all of these people, and get them out of a situation that they might have gotten into, but don't know how to get out of. And so we're trying to make sure that we give them the best options.
What's interesting between this and like wholesaling, for example, people go and try and buy houses at like 40% discounts, right? Something where maybe it is solving a problem. Maybe that person's behind on their taxes, or for whatever reason, they just got to get it sold. And they might take a loss, they might break even, whatever it is. That is like a very specific type of situation that usually is not very fun. But I'm imagining some of these conversations you're having, it really is a win-win. Like if I had seller financed a note for $150,000 and you made me an offer to buy it for $140,000 next week, but I was going to have to carry it for 7 more years or whatever my terms were, it's a pretty compelling offer and we both win. Am I missing something?
No, that's the key right there. And so I think that's where a lot of investors don't know how to have those conversations or even know that they can have those conversations. And so I'm sharing all the things that I've done over the years to help people know that, hey, the local RIA that you go to, there's probably people that have done seller financing deals. And maybe they want to do more deals, but they don't know how. And so you can give them opportunity to go do another deal by buying their note. And you don't have to buy the full note too. So you can buy partials of notes. So say they only need X amount of money, you can just say, hey, I'll buy 5 years worth of payments from you. After 5 years, you can have the note back. And so that's the cool thing about note investing is that, okay, you only need 3 years, 5 years, I can do that. Making sure that from my aspect as an investor, that kind of helps me as my risk because I lowered my risk by not having the full note. The equity is still good as well. So that's kind of where those things can be done at your local meetups every day that people are doing. And so that's the beauty of seller financing.
So let's play that last part out as an example, because that was actually going to be one of my questions. Can you do a partial purchase? So let's say I have a $100,000 seller finance note, property that I sold, and I just need 30 grand really bad. I meet you at the RIA, and what's that conversation look like?
Yeah, so the conversation is basically, as an investor, I'm like, how can I help you? Like basically your number, whatever you're looking for to get, and looking through all of the aspects of a note. So, within the due diligence part, I'm definitely looking at the property, the paperwork, as well as the people in that deal. And so I think that's where I'm like, okay, so if you're needing this, let's look at what you have, where the property is located, and we can work this out. I like to buy in first position. And so if that's good and paperwork's good, the borrower has been paying consistently, I think that's like the surface level of due diligence. And then we can work from there and create like a partial agreement where maybe you don't need all the cash now, but you can get some of that money. And so just structuring the paperwork correctly, I just recommend in this business to get a great attorney that can create this paperwork for you. But yeah, there are some really good things you can do within the like partials and patient, that's a big word, but really just kind of thinking through as an investor, you can get your return, they can get their return as well, and making sure that your risk is protected, doing all the due diligence that you need to do.
Got it. Yeah. So basically, there's a way to do it. Obviously, you have your own due diligence process, which you just described. And then you're trying to meet people out in the world and figure out what problems they have, and if what you have to offer is something that could solve them, which I will say, this is the first conversation I've had with anybody who does what you do. And I can immediately think of people, probably off the top of my head, that are in situations where they're carrying long-term notes, seller finance. Because a lot of people take seller finance offers because they're the best offers. You'll get the highest offer. And so you might sell your property for more than you would have if it was a cash offer, but you don't get the cash. So you're coming along and kind of solving that problem. Even if they sold a little bit higher than what they would have, but you cash them out at a discount, they're still probably walking away with what they originally calculated as their bottom line, and a lot sooner.
Exactly.
I love it.
Yep. I think that people would make sure that they're meeting people. And if you're new to note investing, it's also good to have the education of what the paperwork looks like as well. So there's sellers who are doing seller financing deals and making sure that their paperwork is in order correctly. So you can work with them to make sure all of that is good too in the long term. Because I think the one thing that as a investor, I'll make sure that I tell people, if you're creating these notes, to make sure that they're sellable at the end of the day. And so that kind of allows you to, get liquid pretty fast. Whereas if you're, to kind of a little rough around the edges, it'll take a little more, or you might get a steeper discount. But I think it's important to have that upfront paperwork, collateral, all of those things together so that you can have a sellable note easily.
So the analogy I'm thinking of is like, if you buy, $150,000 C-class rental property and you barely take care of it for 5 years, and then you go turn around to sell it, you have a bunch of deferred maintenance, and it's clear that you didn't really know what you were doing, and you try and sell that property, you're probably not going to get top, price. Whereas if you package things correctly, run a good operation, have a good rent roll, great financials that you can show when you go to sell that property, you're going to get a better rate than the other person.
Exactly.
So what is the note equivalent of that? Like you use the phrase performing and non-performing, like what makes a good note? And then I guess what it would be like a buy box for a note investor.
Yeah. So what makes a good note? It's a big question, but just in general, thinking through like the borrower, let's start with the borrower. Have you qualified them? So have you taken the time to, either look through like an RMLO, going through either their work history, their credit scores? Can they afford all of these payments, right? Did you just get $500 down, right? So think if you got a strong 10 to 15% down, they have good credit, that's a really, stable job, income coming in. That's really great, that we like to see. And then the property, thinking through like the equity involved. So does the borrower actually have equity in the house? As a buy box, I'm thinking through like, I would prefer to buy notes that have, lower than a loan to value of 70%. So if you just create this note or the value is a little, iffy, I might reconsider because my risk is a little bit better. I want to make sure that the borrower has equity. And also the collateral itself, like the property, if I have to foreclose, can I sell this property quickly? And so is it in a good area? Is it somewhere that somebody would like to stay, or, is it in the middle of nowhere, even though it might have 15% returns? If I can't sell it, then that's no good. And then really thinking through the paperwork too. The paperwork is pretty strong. Are you using a third-party service, or can I just look at all of these notes? Are you just putting it on pieces of paper and just counting for it? So those are things that, look for, like third-party servicing, paperwork recorded. Do you have the original documentation of, these things and, put together well? So really just packaging it up. So thinking about that C-class, like property, if some of those things are missing, you could probably, fix it up and do things with it. But really to make a strong quality note, I think you have to have quality paperwork, quality property that someone wants to live in if something happens, and then the borrower is really consistent with their payments. They can afford the monthly payments as well.
Awesome. Yeah. So you're looking at the borrower, but also the property itself, or the asset itself, to say, hey, is this actually worth enough to cover in the event that we have to take it over? Will you be able to sell it quickly? Because I'm sure you don't want to have a note tied up and a borrower that's defaulted and take possession of an asset that you have no interest in operating and can't sell. So
Right.
that's an important element too. And I imagine what this does is it means that real estate investors or people that have had experience buying or operating single family rentals make for great investors because they know what goes into it and what it takes to own a property and keep it growing in value.
Yeah. That those and real estate agents, I think real estate agents have a really strong like up in this industry, if they were, interested in diversifying some of that a commission check, like they know what property they drive down, in their areas, in their backyards, they know what properties are worth. They know, lenders and, how to qualify buyers. So I really think that real estate agents would, benefit from investing some of their commission into diversifying in that way because they know what that looks like from that aspect. And I think they know a lot more that goes into it as well, just going through day to day with their buyers and sellers.
Yeah, absolutely. I think in that hybrid professional spirit, right? It's like leveraging other knowledge that you get from other areas of your life to give you an advantage in an area like this.
Yeah,
I think
absolutely.
it's really so. Before we get out of the types of notes, you mentioned non-performing notes, which I assume just means people that are not current on their payments.
Yeah.
Is there more to that, and do you buy those?
Yeah, so typically it's like 90-day delinquent. And so they might have been in the drawer, and some they might have not been paid in years. And I typically don't buy the non-performing notes. And the one reason why was, and originally I wanted to replace my income. And so when you're buying a non-performing note, you're not getting paid. And so if you're having to have, certain expenses, whether it's working with the borrower, with lawyers, and getting it up to, modifying the note. And so it takes a little bit more expenses up front to one, either get it reperforming or foreclose. And some people might be interested in that way because it's really good, good returns. And so you can get these non-performing notes really cheap. But at the same time, I think there's like a strategy for that. If you're interested in getting property in that way. So as a lender, you can foreclose and then you can get this, valued property, whatever that value is. So it's a strategy. I think it's, it could be advanced. And so I think it's a little bit more active versus the performing notes. So it depends on what you're optimizing for. If you're interested in these really good high returns, you might buy a non-performing note for 25 and they still might have 50 left on it. You got, double your money. Whereas you might have to work with a borrower. I don't like people dodging my calls. So that's just the thing, but, I think it's people who are interested in it. They do really, really well.
You're almost in that scenario buying it with the understanding that there's a probability that it will foreclose. And so you better be prepared to take it over. But if you do that, then you get it at a crazy discount because you've negotiated and you bought the note at a, like in your example, 50% discount.
Yep.
Very smart. So I'm starting to see the ladder of like beginning note investing all the way through advanced. So kind of like one question I have around your background, predictive analytics, there's a bajillion things you could have applied that to in the modern world. And it sounds like you got really deep in that world. You studied, you got a lot of experience. How is it that you landed on note investing specifically as the place to apply all of that and build, make it your one focus?
Yeah, that's a really good question. I think for my analytical mindset, I thought about, everyone who says real estate is, a wealth builder. So I was like, okay, that's really intriguing, but I wasn't really creative in the aspects of like rent flips, fix and flips, and creating these really nice, amazing houses for folks. And the people aspect was really interesting as a landlord. And so there was something that opened my eyes with the spreadsheets. And so I could go through and code and look through different types of portfolios that really kind of stuck out to me that I can use and leverage what I know now that I do every day into understanding how return works, how to underwrite, how to make sure that I'm getting these notes without having so much risk or de-risking and things like that. So really thinking through my perspective as what can I leverage the fastest and the skills that I have the fastest. I didn't have any skills of like maintaining property, working with landlords and maintenance and contractors and things like that. Whereas, some might have that experience and I didn't have any like sales background but I had computer skills, I had programming skills to where this was right up my alley.
Yeah. No, I can see how all those skills would apply directly. And you want to have an analytical approach to this type of thing because you don't want to get too emotionally wrapped up in any of the specific dynamics of each situation. You want to be able to look at things objectively and also kind of see where the market's going, which is another question I have around interest rates. So we've been in a high interest rate environment for the last 3 years. I understand rates are starting to come down, but you have two things at play. One is all the people that are under what everyone calls the lock-in effect, where they got all these cheap mortgages, 2.5, 3.5%, basically anything under 4.
Yep.
And those people have held on to those homes for much longer than they normally would in a normal interest rate cycle. And then on this side of it, we now have people that bought in 2022, 2023, 2024 at 7 or 8% because they were forced to. And now rates are starting to come down in between those two ranges. So how does all this influence note investing, does it make it more compelling, less compelling, harder, easier? What's the effect on what you're doing?
Yeah, so I think right now it's a really good market to invest in notes. And the reason why I think you kind of led on it. So if you're from the investing world, if you're buying a DSCR loan or you have a DSCR loan, the interest rates are pretty high. And so your cash flow gets lower, expenses, insurance is really, up there now. As a data scientist, I could do a simulation basically saying rentals don't really cash flow as much as a note would. So notes are probably making 2 times more than a rental property cash flow. In this market, particularly because of the high interest rates, the high expenses and insurance, investing is really winning. And so if you're taking the same $25,000 and buying a note or getting a DSCR loan and down payment, you're going to come out way on top if you invested that same $25,000 in a note versus a rental property. But you do get equity. I definitely know the pros and cons of that. But I think if you're optimizing for cash flow, I think it's a really good opportunity to invest in notes. As far as the notes that were created in the really low interest rates, those are one of those things where, have a yield calculator. And sometimes you have to offer a little bit more discount because you want that 12% of that baseline. And so you have to kind of work with the seller to see, hey, this was at 2.5%, I want 12%. And so I think they understand that, normally could just work with them as well. But in seller financing notes, kind of saying that 7 to 13% now. And so those are kind of where we're looking at. And so we don't have to offer that huge discount when we're making offers and sending out those LOIs.
Do you think people are going to be more reluctant to get rid of those notes if interest rates continue to go down?
I think so, because if they can't get what they want, they probably will. But at the same time, I think they have to think about the liquidity. And some people, I say 12%, someone might offer them at 10%. And I think that's where you kind of have to find the buyer for you. And so, I think they might be reluctant, but also understanding that, that's a thing that, some of these investors want their returns.
Got it. So, and when you say 12% or 10%, what you're talking about is working backwards into what can I buy this note for that will get me a 12% return on my cash? Is that?
Yeah. Okay. Yep. Yeah. So basically they're thinking through the cash on cash. What can I get on that 12%? Yeah. Yeah.
Okay. And then when you buy one of these notes, the intention is to hold it to maturity or no?
Yeah. Yeah. So I basically hold it until maturity unless I, either want to do a partial note, which I will do, but typically I'm holding them up until maturity. I typically don't sell, but some of my notes have matured. They paid off 2-3 years earlier. So that's also nice and sometimes bad, depending on the tax year. But I think that's where thinking through now as I'm getting into this full time, what we're looking for, how long we want to keep notes and for the long term.
Yeah. And I would imagine too that refinances happen all the time and you can't plan for those because you don't know when somebody's
Yep.
going to do it. But if you buy a seller finance property, they might refi
Yeah.
3-4 years down the road, especially if rates are lower.
Absolutely. Yeah. So you just gotta anticipate that and expect that in the note world. And so, yeah, I think that's a good thing for us. And, we can hold our notes. And as I mentioned, hypothetical as basically like a scaling strategy where we could borrow against the notes that we do have in our portfolio. And so basically keeping the spread. So having an investor provide some of the capital so we can buy more notes. And that's the beauty of note investing as well. So we work with investors to kind of get our scaling, and we do that pretty well. So if we had to sell those notes, yes, but we could also keep them and then borrow against this.
Fascinating. So that's a great segue into, you've mentioned we a few times, and I want to know more about your actual business that you run, how you help people, who's involved, what are the different ways to invest, et cetera.
Yeah, so we, as far as our essential investment group, we basically help investors as we acquire performing notes to get some good returns on their money. That's probably works well with stock market or CDs. Stock markets fluctuate, and so this is the opportunity to kind of invest in real estate notes that are backed by real property and don't have the fluctuations of everyday stock market moves. And so we're, definitely always open to working with investors. And then two, like I mentioned before, buyers looking for private and financing because they might not be able to get traditional bank lending. And so working with buyers to get them into property so they can have equity in their property. I have, very great stories about a woman who has it was my second deal and she still owns this home, but she has like $200,000 worth of equity now. Like if I was renting it out, she wouldn't get that. And so, like I keep going back to like the win-win opportunities. And so we're always willing to help people as well. And as well as sellers who are interested in selling their notes to making sure we give them great offers as note buyers and getting them the capital that they need to do other deals and do things to get more liquid.
So, no, thank you. That's a helpful range. And I appreciate too that you find ways to kind of give back and give people opportunities to own when they might not otherwise have them. I want to understand better how that works. So if somebody wants to invest with you, are you teaching them how to find and buy notes, or are you buying notes and then they invest in your fund of some sort?
Yeah. So typically what, we do one-to-one based deals within our portfolios. And so our strategy is, we have these notes, and so we can basically use them as collateral and then go buy new notes. If an investor is interested in, buying a note with us, we also do that JV as well. But, at a larger scale of our portfolio, so that we can have the opportunity to get a strong return on our capital.
So is there not a portfolio or group of, so I would imagine the more of these you can collect that have strong underwriting, you guys have a process, you have a system, you have experience. And so like somebody who wants to get started, can they invest in a basket of these and say, hey, like, well, then if one drops or one defaults, like it doesn't take the whole thing down?
Yeah. So as of right now, we don't have a fund yet, but we're looking to get to that. Right now, we're just doing one-to-one deals. But, if we think about that portfolio as a JV partner, we have a good GPLP structure. We can definitely have that pool of all of these diversified notes that range from different regions, because you don't want to just pick one. But we have different regions, different collateral, and things like that. So, yeah, that's where we're looking towards in the future.
Very cool. And then the other side of the business, so I want to understand the mechanics of this. You're saying you're able to provide opportunities for people to live in and perhaps finance houses that they wouldn't otherwise be able to lend on. How does that work? Are you holding the note and providing, so you buy a seller finance note and then you find somebody who wouldn't qualify and you say, hey, I will.
Yeah, so this will be more of an active approach of creating the note itself through like owner financing. So basically getting some property and, getting it to the value that is appropriate and then selling it on seller financing. They get a down payment a lot faster than the traditional bank loan process, but we're still qualifying and doing all the things that makes sure that it's sellable at the end of the day. So that's where we're, getting people into homes in that way.
Very cool. Can you do this in a self-directed retirement account?
Absolutely, yes. So I have notes in my self-directed IRA. And so that's the great thing about notes is that you just fill out the paperwork and your custodian allow you to buy these promissory notes, and they collect the income for you and through that paperwork. But I really encourage people to start actually, if they don't have any capital for themselves, if they don't have any sitting there, a good way is a self-directed IRA because you can buy these notes and get 12 to 15% on your income, and the income that's provided by the note. So I love self-directed IRAs for these notes.
Very cool. So now just to kind of round it out a little more of the personal journey. So you shared where you started in predictive analytics and data science, and you got an MBA. Now you have your own business. I am quite sure that you probably wouldn't have gone all the way down that path if you knew that you were going to do this anyway. So I'm curious if you maybe can share a little bit of some of the discovery that you had in your own life that led you to go into entrepreneurship versus kind of just running and gunning down the corporate ladder.
Yeah, I think, just life in general, just thinking through, I had my first kid 3 years ago, almost 4 years ago now, and really just thinking back, there's a lot of time that I want to spend with him and my family, and so that was one, and really just thinking through what I wanted to actually do. So, I could keep going up the corporate ladder, but at the end of the day, I wanted to do something for myself, and so I had this side hustle that I was doing, and so thinking through how I create this as a business. And I think the goal was basically to be more with my family, spend time with them, have time freedom. All I need is my MacBook. I can be anywhere. And so thinking through, if I was going up the corporate ladder, I probably would be a lot more busy, being a manager, a team lead and things like that. And really just taking a step back and saying, okay, I want to be more, at home more, on vacations more. And so really thinking about the vision that I wanted to see for myself kind of changed as becoming a mother.
I have children of almost the same age, and that was definitely a big reframe for me too. I always talk about how there's this narrow window of time where they're old enough to interact, but they're young enough that they haven't gone off and found their own friends and interests and gotten too cool for mom and dad. And I'm very determined not to squander that window. And it sounds like similar sentiment to what you just said.
Absolutely. Yeah. It's a great space now. It's been 6 months. But really just I wouldn't trade this. It's journey. The journey is being all of these things have to get done. But at the end of the day, oh man, this is great. I wouldn't trade it in.
So with that said, do you feel though that your W-2 and all the skills you gained and the experience and whatnot served its purpose in your life plan?
Oh yeah, absolutely. Because now I can use AI with my business. And so I'm one step ahead of, a lot of investors that are in this space now. And so I know the tools to use, I know how to do these things. And so really, I think I got a great learning lesson in, 10 years of being in my career that now I can use it to scale faster, be a better investor, think through things differently, have, strong decision making. So really, I think it just was a teachable moment. Whether I think about it or not, it was really helpful. So now that I can go and do a lot more for myself and for, my family and other avenues as well.
Yeah, absolutely. That's why I always try and just kind of keep hammering that point home that your W-2 is not your enemy,
Nope.
Especially if you do something that is aligned with something you're interested in or a skill that you have a strength in. You can become a differentiated product in the market just by investing in yourself. And that doesn't only mean taking online courses and joining masterminds, which is incredibly powerful. It also means having a career path that aligns with what you're trying to do. And that's a very powerful asset. And even though you're not working there anymore, nobody can take that experience away from you. And it's clearly guiding and influencing the success you're having in your own business.
Yeah, absolutely. And so I think people in their W-2, I could go back today. So I think that's really helpful. It's like, I knew where I didn't want to be, I'm in my W-2 forever, but I made strong connections. I still did what I did, could move in excellence and things like that, because I knew that even though I wasn't going to be there, that's just how you move with integrity, you move with anything that you're doing. So if you're slacking off and, doing things that you might, because you know you're not going to be there forever, it still doesn't serve you. You still have to give and, be a asset and strong value. And I think that's where a lot of, thinking through this past 6 months is like, yes, I did my best every day, even though I knew I wasn't going to be there forever.
Yeah, no, absolutely. And I think it's, you and I were talking before we hit record, there's an interesting, it's a very personalized calculation that people have to make when they're contemplating leaving or starting their own thing or whatever, where you either have to build the business fully before you leave so that you can feel perfectly comfortable and everything's already running and humming, which is in most cases not realistic, or there is a bit of a leap of faith where you have to maybe have the framework in place, but you can't invest all the time and energy to get it in full maturity until you're out. Was there you are an analytical person by nature, as you've said. Was there a specific way that you went about kind of figuring out what the right time was?
Yeah, so I think it was mainly thinking about, time. And so I was thinking through I was spending so little time on my business that if I spent more time on that, I could scale that up to more investors, talk to more people, just networking with them, finding more deals. And so really, I think that was the part of the time thinking through, okay, calculating how much time am I spending on this very little short window I have after work, where now I can spend a little bit more time and take that leap of faith. Not everything was perfect, but really just thinking through, if I had the time to do this, imagine what I could be doing.
Yeah, and I'm sure as a data person, you probably also had some idea of if I'm currently spending 1 hour a week and I go to one meetup a week and it leads to, you run that data over a 6-month period, it's led to this many deals. Well, it's if I 10x the amount of time I spend and go to 3 events a week instead of 1, you almost reverse into what it would take to get to your number.
Absolutely. So I think I have KPIs on my whiteboard thinking okay, how many touch points am I doing? How much content am I making? All of these things are adding up to that one big opportunity. And so, yeah, I think that's where keeping track of things, looking through metrics, spending time, even my phone, am I doom scrolling or, should I be doing something else? But really the time aspect of being able to identify it and run with that and make sure you have good metrics and KPIs that you want to achieve is really important.
Yeah. Awesome. Well, great insight on not only building a business and how to think about that. I know a lot of people that listen to the show are probably happy in their W-2 and have careers that they like. That's the boat I'm in, but also have an entrepreneurial gene in them that makes them want to explore and build. And so it's really fascinating to hear how different people have navigated that and the different timelines. And so I appreciate you being open with that. And of course, appreciate all the education on note investing. Selfishly, I learned a lot, and this was a good opportunity for me to ask a bunch of questions that I've wanted to ask. So with that said, Sierra, where can people find you? And if they want to start working with you or investing, where can they do that?
Yeah, absolutely. So if you sign up for my email course, it's free. It's kind of giving you all of the methods there. So if you go to wealthwithnotes.com, pretty simple website that you can learn from, engage with. And I do send also emails from that. And then on social media, you can go to Sierra Davis Official on all platforms, on YouTube, Instagram, as well as TikTok.
Awesome. And I can personally vouch that the email course is great. People who know me or have listened to me know that I love writing. I love nerding out on reading different types of content. And it is very, not only easy to consume and understand, but very informative. And so I highly recommend that if this episode piqued your interest. So we'll make sure all that stuff's in the show notes. And Sierra, hopefully we'll have you back sometime again soon. But thanks so much for coming on.
Thank you so much.
Thank you for making it to the end of today's episode. As you may know, podcasts are very difficult to grow organically. If you're getting value from today's episode, I'd deeply appreciate if you can take 30 seconds to leave my show a 5-star rating and review. This will go a long way to helping me reach more listeners just like you. Thank you so much in advance.